Hi guys, welcome back to the channel. Today we're going to review Unilend. If you're new to my channel, please check out the video how this channel works. Otherwise, I'm going to jump right in this project. So this is a top-down view. You can see that there are some uncertainties. These uncertainties represent things that are unfinished or yet to be determined. However, I am very optimistic about the potential of this project, but they do need to deliver in order for it to have substantial price gains in the future. So what does this project currently solve, and what do they do? Well, nothing. They're not live. They don't have a roadmap, and there's nothing out yet. However, I talked to the team on Telegram. They're going to be releasing roadmap soon, and they're going to release that roadmap, and then they're going to try to release their products. They are a team with a record from Matic, so I don't expect them to be, one of these projects that's a scam. So I do expect them to deliver something. And so what will they produce in the future? Well, this right here is a simple idea. So often the simple ideas are the best ideas to invest in. And that is, they want to go for all these things, but the thing I'm noticing, and that has been mentioned to me, is that they're going to go for supporting any asset and lending and borrowing. And as you can see, no one else offers that combination of being able to lend or borrow any asset. The projects that can support any asset like Balancer don't allow for it, and the one Uniswap doesn't allow for it either. And supporting it, like lending and borrowing any asset, will allow for you to do things like leverage trading, which is not available to a lot of people in certain countries. If I'm not mistaken, I think that the United States doesn't allow for a lot of people to do leverage trading. I believe personally in liberty. I believe people should be able to do as they please. So this project proposes to offer the ability for options trading, that's leverage trading, to anyone. And I'll show you at the end of the video how you could do that. And so to me, that's where a lot of the value proposition comes from this project, is if they deliver this. Being able to list any project and being able to lend or borrow any project. But they also do need to get liquidity, and that's going to be something to consider about this project as well. So how much money does pass through the system to justify a substantial market cap? I put, in order to see this thing 10x, you have to see about $50,000 a day of income. And the question I would ask is, when the token is fully known as to what the token will do, they have certain things that they said the token will do. But will the token be in control of this market cap? Will the token have influence and power over this value? And if it does, then it will be entitled to that value. It will have it will have a token model that is deserving of a market cap, if the token model can actually influence and affect the project's success. That's how you know if a token model is good, if the token can actually affect the project in a negative way or a positive way. That's, if the token's really in control of things. Otherwise, it's a garbage project. If the token doesn't have control and it doesn't do anything, then it's useless. But I'll get into how that could happen with this project or not. So does the team have a track record for showing that they can deliver? Yes, many of them are Ethereum developers, and they have the skill sets. Okay, so I'm going to start off with, same place I start off with any project. It is a token used for services and governance. So once again, many of the things in this project are spelled out, but they are not built out yet. But that's why this project is valued at such a low market cap. So they propose to have a token model that will have governance, platform utility, and will have other to-be-determined functionalities. It will be able to control trading pairs, ratios, and these are important functions. And that's where I say, if it really controls these things that they say it will control, then yeah, the token will be entitled to a substantial market cap if they do have a high value pass-through through the project. If they have a decent amount of value in the project, then the token will be entitled to some of that value if it's in control of some key project characteristics. And they say that that will be the case. But I have seen projects make promises and not deliver. So take that into consideration with this project as to whether or not you want to invest with them. The value of the target market is large and it has room for growth. So they mentioned in their white paper, the light paper, that 29 billion is unserved in value on the Ethereum long and short positions on any listed coin. So they are saying that there's a lot of projects on Ethereum that are not currently being served because you can't list any project. Like Uniswap allows for anyone to trade any Ethereum project, whether a scam or not. There's no one that has to be appealed to. It's permissionless. And in my opinion, guys, I am a big fan of permissionless projects. So that's one of the reasons I do find myself leaning in favor of this project, because it's permissionless. Anyone can list a project. You don't have to appeal to anyone. It's just code, and you list your project. So what you could do is you could use collateral, and that collateral could be your long position, and the what you are being lent will be your short position. And that's where you can take your leverage. And that depends. The leverage you can acquire depends on the loan to value ratio that you will be allowed to, which is controlled by the token. That's what they say. And I will go through all of the details of leverage at the end of the video. If you want to see a lot of mathy stuff, that's where we're going to see it. So, but in summary, is the value of the target market valuable? I would say yes, it is. So the current niche, we know that nothing is really live. So we're going to go ahead and say that that's risky, and that is not contributing to price performance, and it won't until we know more, until we know that these guys will deliver. I do expect price performance from this project, because I'm operating from the assumption that they will end up delivering. And you can see I have high risk of poor delivery. So I put 3 scenarios here for what I think could happen. So in my opinion, if this project delivers, if they deliver a strong governance structure where the token economics are actually good, and if they deliver as promised in a timely manner those products on which they say they will offer, I expect this to be one of the strongest performing in my portfolio. Something within the top 10%. Very strong performance. This is the type of thing that could make people wealthy. But it really is dependent on a good token model and delivering the product. So that's where you could invest in projects like this one, where there's not a lot delivered. But one of the things to say is the team does come from other projects, so it looks like they may deliver. But these are big ifs. We're saying if they deliver a good governance model, if they actually attach that value to the token, if they deliver as promised. These are big ifs. They are not guaranteed at all. So if they deliver a good product and poor governance, I think it'll be about your average run-of-the-mill crypto. That's not too bad still, because I think crypto is going to perform quite well, especially I think that there's a crypto bull season coming. It's brewing. So, that's relatively low risk as well. Nothing here is investment advice. But finally, if they do deliver both, if they have poor delivery on both things, I expect this, even though one of the reasons this isn't like all the way down here is because this project's market cap is extremely, extremely small. It's hard for it to get even lower than it is now. But you can just consider it as a complete loss. You can probably exit your position, with substantial losses, but I hold projects for 6 to 24 months. So we'll see if they deliver these 2 big ifs. But there is a high risk that they of poor delivery, of poor token economics, or that their products don't come out in a timely manner, or they are no good. So those are the risks that you're looking at. If, like once again, if they do deliver, it will be one of the strongest, but they have to deliver on both those things. So future increase in demand for the token. I am expecting that. Future market excitement. I expect that to be the case as well. Current awareness before the hype stage. The project hasn't hyped. It hasn't had any huge pumps. So it is entirely possible that we are before that hype stage. Now they have something called Unilend Legion. I'll get into that. And that's their marketing. And it has already started. They have 13,000 views on YouTube from what I believe Elio Trades. I think he's working with them. I think he's mentioned that. But I do know that Legion is still early, and that's how they're getting their project out there. So what is Legion? Legion is, it's social media engagement, growing the network of influencers and partners, testing, translating into foreign languages, mentoring, education, helping customer on-ramping, helping programmers, etc., and community maintenance. These are things that they reward people who participate in these things with their token. And this, in my opinion, is a good marketing strategy. I actually like this marketing strategy. Because you build that community, you're going to need to build a community. One of the things to note, I'll get into the team, because I am going to mention that's one of their strengths. So they have regarding the team on this project, they have the Matic vice president of marketing has moved to this project. They have the chief technology officer from Meta Transact, and the CPO also from Meta Transact is also the CPO for this project. And what Meta Transact allowed for was people to pay for their Ethereum fees with any ERC20. So that shows that they have that Ethereum competence. They know how to program on Ethereum. And Matic shows, Matic is a good product, and they show that they come from legitimate projects. So the product team has that skill sets. I did not see any billion-dollar startups in their history or any inventions, so that's why I put this as not contributing. Okay. Best option of the competition is if they deliver, they will be. And that's strong. So if they deliver, they will be in. We're operating from the assumption that they deliver for this project. And that's why, I did invest in this project. Strong team, strategic partners. So far they have two, Blazell and Anchor. Anchor is distributed web services like Web3. So, connecting the Polkadot's API, connecting the Ethereum's API. API is just being able to communicate with, Ethereum, Polkadot, etc. They're, so that they can run their tokens and do these swaps, etc. They'll be able to connect through these APIs here. Hopefully for Polkadot, hopefully for Ethereum, they'll have those capabilities through Anchor. So they have some good partners. But this project is so early, I'm sure that we're going to see more partnerships form in the future. They do have long-term vision and strategy, in my opinion, because they have clearly defined goals and a clearly defined product. So it's hard to screw it up if you have such a clearly defined product that you want to deliver. Their mission statement: permissionless protocol that combines spot trading services with money markets and lending, smart contracts, all of these money services in a permissionless way. So pretty good mission statement. Well, that's how they define themselves. That's why I put that as their mission statement. All right. And once again, I put that their future marketing is strong because they get the VP of marketing from Matic. So they have the CEO is a marketing guy. So it is likely that this product will have a very strong marketing approach in the future. And that's why I had to jump it back over there. Okay, so regarding their current awareness, it's still pretty low. Their team only has about 4,000 followers. The project on Twitter has low followers at 5,600. YouTube exposures in the 13,000s, and their Telegram actually is pretty decent sized Telegram, surprisingly. considering that all of these social media things are pretty low. I put that the social media is low because, Twitter, YouTube, all of those, that's how people become aware of these things, and the numbers are pretty small still. So is the token hard to acquire? It's on Uniswap, and it has decent liquidity, but I would say the market is still mostly unknown. And because of that, I'm putting that this project is hard to acquire because people are just generally not aware of it. So money needed to move price up decreases. I expect that to be the case. So I expect there to be, like, the amount of money to move the market's going to decrease. The tokens on the sell side to decrease. I expect that to be the case. So this thing, one of the most appealing things about this project is they have a good idea that's easy, and they have a really low market cap. And the team is a real team, a legit team. I've been in crypto space for a while. It's very hard to find projects that have a decent team with such a low market cap of 4 million, but fully diluted it would be around 40 million. So that is something to consider. That's actually not so small a market cap, but it is, by my rankings, still a micro cap. So it's a very, very small project. So we're going to go over the token supply distribution and the inflation rate, which are pretty much the same things in the short run. And regarding major events, they're going to release the roadmap, but so I put yellow because that's not the biggest deal in the world. It's releasing the roadmap is not a product, so who cares? I'm glad they're releasing the roadmap, and it's very important for a project's success. But as far as an investor is concerned, who cares? I want to see something real. I want to see that you guys are going to build something cool. Okay, so regarding the token release, we have this release schedule right here. You can see good entry dates if you think that the market cap is so small that I don't think that the release is going to be that bad. But if we do get higher market caps, this is something to consider about exiting or entering your position. If the project is to realize a lot of value, you might want to exit your position and just wait for these dates, which is the first of the year for 2021 and March. Those are the dates that we're going to see. We're going to see from now 131% inflation until the 1st, and we're going to see 76% inflation until March. But together, until March of next year, we're going to see a 300% inflation in token supply. And it's not much after that until half the token supply is released. And you know me, I say like some of the best times to enter is right after half of the project's total release, because that's when inflation can't be more than 100%, or it can be, but it could be at around 100%, but you can never grow more than doubling the amount of tokens in circulation. So right here at 50 million tokens, half of them are going to be released in the middle of 2021. So these are all dates to consider if you want to take this into consideration. That being said, this project is a $4 million market cap. It's fully diluted. It is 40. So it's so small that the inflation factor shouldn't be the biggest negative force in the world. So it's regarding if it's been in a bear market, it has doubled since it's been released. The ICO price was around 15 cents. For their accredited investors, I think they got in at 7 cents. It's valued at like 35 cents right now. 15 cents, 7 cents, and now it's at 35 cents. But because, once again, it's so small, so early, so small liquidity, these things are, it's almost irrelevant because there's not much of a market to establish and we don't have big trends and etc. It's before it's ever had a major hype stage. So that's why I put it as green, because it hasn't had a major hype stage. So there's a chance that it will, but it's always a risk. They don't serve anything right now, so that can't contribute to price. And it's not on many exchanges. This doesn't really contribute because it's on Uniswap. So anyone who knows how to use Uniswap knows how to acquire it. All right, so we're going to go back into governance. I'll take out these things that don't matter. They do not have token fees as far as I'm a token burn model. As far as I know, there won't be any token burning. They do not give token weight for lockup of tokens in governance, so I didn't see anything like that contributing. Protection from custodial exchange. This will be to be determined, but probably not a big deal because we're talking about DEXs taking over, and this project's on DEXs. It doesn't even need to be listed on a centralized exchange to be fully liquid. And for people to realize a lot of potential gains, especially since this is permissionless, they shouldn't even care about getting on centralized exchanges. And that's a lot where all of this damage effect from custodial voting comes from. So custodial voting, for those who don't know, is when a centralized exchange holds a token that has governance, they will vote on their users' behalf and destroy a project. That's what happened with EOS, for example. Okay, so those that think long-term strategy, those who think that long-term strategy, I put this as neutral as well. I put neutral for their, I put their CEO as 6.5. And the reason why I did that was because I don't know what's going on here. Encrypted issue. I don't care about that. Okay, so the reason I put their CEO at this level is because he doesn't have any billion-dollar startups in his history. And in order to be one of my top-tier CEOs, you need to have a billion-dollar startup, or you could, he did work at Matic, and that is something that got up to a $112 million market cap, so that's pretty good. But he has no inventions and no billion-dollar startups in his history. But this project could always be his proving ground. There is going to be, for many people, the first project that they bring to $1 billion. And that's where they make their record. And this project could very well be the CEO's project to do that. So, and once again, I did invest in this. So, investors give, people a chance to prove themselves. And I think they might do that with this project. If they deliver, we'll see. So the governance is to be determined, but it will be, regarding how it will affect developer compensation. 15% is towards the team of the token supply, and proposals to be determined to see if the token can vote for things that will affect developer compensation. So the governance, once again, I said depends on structure, and it depends on how valuable this control is, collateralization ratios and base pairs, which I think is valuable, and thus it can derive its value from that if they build that out. So that is to consider. It looks like the governance will actually be able to capture value, according to my opinion, but we won't know until they actually build it out. If the token has control of critical project components, then it will actually derive its value from the project's utility. And whether or not we get high value people from the token economics is to be determined with the proposal structures, with the token model to see if it creates the proper incentives. Once again, to be determined if that token model is set up right. I hope they do set it up right, because this could be a major performer if they do. So external transfer catalyst inhibitor, that's what stops people from leaving your platform after they have started using it. If they capture liquidity, and if they're the first project with permissionless listing for a lot of these things, which is I'm going to get into at the end of the video. That's why leverage trading will be powerful for any crypto project. If they get that liquidity, then people will want to stay there just by the fact that that's where the liquidity will already be. Look at Uniswap. It will be very hard to kill something like Uniswap in the future until someone else captures major liquidity. And usually it has to be like 10 times better to capture that volume. Like look at Ethereum. Ethereum has many problems. You're spending $15 a transaction on Ethereum. It's hugely inconvenient to use Ethereum because no one wants to use those transactions. But there's no one that's really 10 times better or has figured out how to bridge and bring that liquidity. Liquidity in crypto is everything. So if this project does acquire that liquidity, it will have everything it needs to keep its people. It doesn't matter if someone copies their code base. If they have the liquidity, then they've won. and it'll be hard for people to transfer. And because they're permissionless, they very likely will capture liquidity for a lot of projects. So they may be difficulty of internal transfer. How difficult is it for you to on ramp? Like at US, this is one of the things that I would put as red. First mover does not need this, but it'll be MetaMask type difficulty. How difficult is it for people to use this project? Well, MetaMask level difficulty, so we know that's not super difficult because there's a lot of people using Uniswap. Internal transfer catalyst. So what are they doing to motivate people to come to their platform? They have Legion, which has those aforementioned stuff. They'll be the first leverage for many projects. And they will also provide liquidity mining and to be determined, as I asked their Telegram group, their development team, and they said to be determined for a lot of these things. So those are the things that will attract people to come to their platform, how they will get that initial liquidity. And I do, in my opinion, think more people will be using the project in the future and it will be easy to use. So if they deliver, it's very likely the project will have a lot of buy and sell activity on decentralized exchanges, and the projects are on high volume dexes, so that will lead to pool of tokens in the liquidity pools, which will lead to less tokens available per person because they will just be sitting in those liquidity pools, accumulating from, that's what happens with liquidity providers. And that brings value to a project. So if you have a lot of volume, by volume alone, you could benefit. And that's why it's good to have a community of people with a project. Developer motivation, I expect that to be strong because as we mentioned here, governance in the proposals and 15% of the tokens will go to the team. I do expect high value upgrades in the future, because the strategy is pretty simple. And the value of the services provided, I do expect that to go up. Now, I put that large business models demanding a token. It looks like the token governance might be weak in this sense. Why would a large business care about controlling ratios? Why would a large business care about, it may be partners may be formed and list their token on here and buy this token and vote. But it looks like there's not the biggest incentive for businesses to own this token. So that's weak from that standpoint, and I don't like that. Hopefully, in the future, though, it is to be determined because this thing is not fully written out yet. But for now, I'm going to write. I don't think that big business will want to own this token. But thankfully, this is such a small market cap. It's not the biggest deal because this project could still 10x, 100x, even without these huge business entities buying it. But once again, this depends on them delivering. Okay, and so that's everything. The basic summary. The pros, it's very low volume, very low market cap. So that's very good. It's a very simple idea, very large market, and they do have an experienced team. So pretty good pros. The cons, the governance to be determined. It may be weak and that may destroy most of the value proposition. The project is nothing live. There's no roadmap yet, which will probably change soon. The governance looks weak from a tokenomics economic standpoint. There will be low business demand. At least it looks like that's the case. That could easily change. Once again, to be determined. So those are the cons. And that's why I think this has such a small market cap, because there's a lot of uncertainty. But that could easily change, and that could make this one of the strongest performing. And as you've seen if you've watched my channel, you can see that not many projects are up here in this high expectation with that high of a level of performance. But if they deliver both of these things, I think this will be one of the strongest performers out there. Okay, so if you're not interested in math, you can go ahead and take on off. Otherwise, I'm going to jump into some math. So this is leverage trading. And what this is I'm going to talk about how you can use this platform if they offer these services to leverage, to increase exposure to certain assets. So we're going to use a collateral ratio of 75%. And N is the number of times that you repeat the process of what you would do is you would deposit your So what you would do is you'd see something like this. You'd be wanting to take a long position on, let's say, Bitcoin. We'll use Bitcoin for example. We want to short USDC, so the United States dollar, right? So what we would do is we'd take a loan in USDC. We would get 75%, because it's a 75% loan to value ratio, from our $100 worth of Bitcoin that we lock up. And then we would take that $75 and turn it back into Bitcoin, okay? And this is how we leverage. We open up multiple loans. I'm not saying we, as in we do this, because I don't recommend doing any of this stuff. I am not a financial advisor. I'm saying how it can be done. So here's your locked value in Bitcoin. Now this is all prices at the time you open up these loans and open this leverage position. So you take that $75, you turn it into Bitcoin, you deposit it again. You do this process repeated over and over and over, and you'll have a stack of Bitcoin locked up that you will be exposed to with some final amount down here. Now the risk of this is if, for example, if the amount of L to V drops below that some threshold, the smart contract will automatically start selling your Bitcoin. It will market sell. And in some cases, I don't know if how this project is going to do it. It may do it all at once, or it may do partial sells to restore an acceptable loan to value ratio. Partially selling Bitcoin. I would prefer that method to happen so that it doesn't hurt the market. Like if there's a lot of projects taking long and short positions, if this gets to be big, partial selling would be a lot better than dumping lots of Bitcoin on the market or dumping lots of token on the market that people use as collateral. So that is one of the risks to consider. So you do this process and you end up with some value at the end. Now let's say that Bitcoin 10x's, okay? This is the last value of the loan that you got in USDC. So this would be the value you're holding. You would subtract this amount, and you would be able to pull out this amount of Bitcoin. So it would look like this at closing of this leverage position. You would see, this is subtracted from what I owe. This is what I get, and then to unlock the 100, I have to subtract this amount. I have to subtract this amount, etc. And you subtract all of these amounts to pull out all this value of Bitcoin. And you can see, wow, that's a lot. So you're getting some substantial leverage if the ratio is 75%. So we're going to say we're going to write some math here so that you can calculate these numbers in the future. So for our purposes, we want to see how much leverage we can get. So we're going to set the collateral. This is C equals the collateral, and F equals the L to V ratio, because we want to know, based on what L loan to value ratio that they give us, how to calculate our exposure. And so this funky little thing is just about summing, like this right here, summing all of these together. It looks super advanced, but it's not. It's just summing all of these together. And is how many times you repeat the process. I put 10 because that's practical, and you capture most of that leverage, but you could always change how many times you do the process. I is just 1, 2, 3, 4, 5, and 6, whatever, like how many times you repeat the process. And, it'll give you your, if you do the math. Now, I set collateral as 1 because we just want to know how many times our original collateral will we get extra exposure. So the value in the token that is borrowed is 2.8 with this example that I used. So that is that will remain constant in terms of USDC. This is the thing that you are shorting. Now this could be whatever you're taking out as a loan. Like if you're taking out dollars, you're going to owe back dollars. So that's where the market moves in terms of the thing that you are shorting. And that's where you can get substantial losses. And I will go over the loss situation in a minute. If the market moves against you. So yes, you're expecting Bitcoin, in other words, you're expecting the coin that you are using as collateral to outperform the thing that is being borrowed, because that is the thing that is being measured in the contract. You will have, when you set this thing up, the amount that you borrow is what you owe back. And so that is, the token that you put up as collateral is being compared against the thing that you borrowed. So whatever it is you borrow is what you have to pay back, plus some interest. And remember, whatever your interest is going to be multiplied by the amount borrowed. So if it's like 10% interest, it doesn't, that could be 100% interest in a year. But, if you're someone who wants to take leverage for a short period of time, you don't care if you're spending 10% interest for that in a month for, like 2 times exposure or more exposure, depending. So this equation is the equation for how much Bitcoin will be exposed. So you have the amount of Bitcoin locked up. This is the equation for like the summation of all those Bitcoins at 10 times, doing this cycle 10 times. This is the number we arrive at for a 75% loan to value ratio. And so the profit that Bitcoin does minus the amount that is pulled right here will equal your profit. And in this case was 246% leverage. So, and as you can see that it could change depending on how many times you repeat the cycle and like depending on the LTV. So all of these numbers can change. But if you just hold your Bitcoin, it would be 10, like we're saying if Bitcoin went up by 10x, right? We're saying if this profit went up 10x, we would see, this value of Bitcoin would go to this value locked up would go to this value right here, and minus 10, or this value would go to right here, minus this value would be the amount that you would have profited so far, and then minus 10, which is the amount that you would have had if you just held, and that gets you your profit. And that's where I got the ultimate value of 246% leverage. Okay, so finally, this is the whole equation written out. So if you want, you could use this equation in the future for doing leverage trading if you want. And this is the coins in the contract. This is the coins you borrow. And this is the profit that you will get. Now, the risk side of this is if like at whatever value it is to liquidate, that's when the market will either sell, and we're going to use the example if this sells back everything at some LTV value. So what you would do is you would get liquidated, and it would be your long position, and it would market sell your position. And so you could see what you would get back right here would be the leftovers, right? So you would subtract, like this contract, when it reaches that LTV value, says you pulled out that much, so it will subtract that much from its Bitcoin at this value and sell it. And you'll get back the difference, which is this. And then it'll do that for all of these contracts that are at the LTV ratio. And so you'll get back, hey, right here, in a perfect world, you get back everything, okay? Because at that value, we did that. We with this example, we did it exactly at the point where it would get liquidated, and we assume that it goes up in value, which is not a real world scenario, but all of this is just for example. But you theoretically, if it went down like by some very small amount, you would get everything back. But of course, that's not the way it would work. You would have a loss from market sell. And this is the way it looks for the returned value that you would get. And the amount that would be sold, here's your loss, multiplied by each one of these, there would be some loss from the market sell. And so it could be quite substantial. And remember, if Bitcoin's value is up here and it drops down like this, and you took out the loan right here, and you expect the LTV to be really low, so you gave yourself some extra cushion, and you opened up your leverage right here, well, it's going to market sell your position at a much lower value, and then Bitcoin can jump back up, and wow, you realize some substantial losses. So there is substantial risk, obviously, to leverage. And if the LTV ratio is lower, then you can use a lot. at lower market prices, like based on what I just said. Like if Bitcoin's up here and or if it goes down here and you open up the position, it drops lower, and you gave yourself cushion, and it market sells at a really low price, you could realize substantial losses. So these are all things to consider. This is for very sophisticated investors. But I did want to include that because I just found it interesting, and I wanted this, for future reference. I wanted to provide myself with the equation, so I figured out all that stuff, so that I can come back anytime I want to do this and see if it's practical to do. That being said, that's everything with this. I know it was quite lengthy and the math at the end was crazy, but I can expect this thing to be very bullish. If they have people using leverage for a lot of these crypto projects, I mean, this thing could be wild. If they get liquidity and if they deliver, we could see a wild ride with this one. And so I'm bullish. I think they can deliver, but I have been let down in the past with people making promises, so we'll see. As for that, good luck investing, guys.